Everybody, Professor Barth here, Associate Professor of History at Arizona State University. Inflation Nation, October update. I recorded a video last Thursday on why the Federal Reserve is 100% responsible for this inflation crisis. I promised another Inflation Nation video. It's taken a little while to make it. Last Friday, I hosted an event at ASU with the keynote speaker, Dr. Brett Weinstein. Long story short, I'm the associate director of a new center at ASU called the Center for American Institutions, and we had our official launch on Friday. I invited Dr. Weinstein out to give the keynote. Wow, stole the show. He was so good. He focused much of his talk on the great moral crime of institutions, like many colleges and universities. Thankfully, ASU is not one of those. The moral crime of many institutions like colleges and universities and the DOD requiring young, healthy people to get the jab. And he went off on that. It was a huge hit with the audience, great reception. And Dr. Weinstein's a really interesting man. We had some great back and forth privately. But anyway, that went really well. Maybe I can talk more about this new ASU Center for American Institutions in a future video. But for now, we've got these inflation numbers, and whoa, not good at all. The month of September, inflation rose at a higher rate than expected, even though the Federal Reserve has raised interest rates, with the upper limit of the federal funds rate now at 3.25. Core inflation was the really big story out of these latest CPI numbers. Core inflation rose to a 40-year high since August of 1982. And if you watch my videos, you know what core inflation was. But in the event that maybe you're not familiar, core inflation is when you take food and energy out of the CPI calculation, not because food and energy don't matter, they do, but because they tend to be more volatile, especially energy. And so you remove that from the equation, you get a more solid picture of what prices are doing more broadly. 40-year high in core U.S. inflation. Here's the graph. CPI, overall CPI, year over year. Look at that for the last 1, 2, 3, 4, 5, 6, 7 months. For 7 months in a row, overall CPIs exceeded 8%. That is not good. Obviously, bad timing, by the way, for the Democrats going into these midterm elections. If you zoom out from 2019, look at that. Not looking good. Year over year rates gone down slightly over last couple months, the overall CPI that is. But this is in spite, just a slight decline in overall CPI, despite all the tightening of monetary policy at the Federal Reserve. So bad news all aboard. And then the core, year over year core CPI at a high. Look at that, at a high. It's gone up since the summer. Month of September, year over year. That's a bad number. Okay, that's a bad number. And this chart here is from the Wall Street Journal. In the dotted line, overall CPI. In the red line, that's core. Look at that. Overall CPI dipped just slightly. Not as much as had been anticipated. And just a little bit. Look at core. Up. It's up. And then you look at month over month. So it gives you a real-time look at what prices are doing. Month over month, overall CPI up 0.4% in September. Not as high as what we saw earlier, although higher than April of this year. Remember when the July numbers came out, Biden said there was no inflation. There was zero inflation in July. Like, okay. I mean, this is what he was referring to, but obviously a deceptively phrased talking point there. But month-over-month CPI, but compare that to month-over-month core CPI. Core CPI month-over-month, and it's as bad as it's ever been month-over-month, and so that's why we're at core CPI year-over-year is at a 40-year high, more than 40 years actually high. And then you break down all the price. I'm not going to review all these. On the left-hand side, left column is month-over-month change in prices. The right column, year-over-year change in prices. Food at home, grocery prices. So your grocery price is up 13% year-over-year. Meat, poultry, fish, and eggs up 9% year over year. Dairy and related products up 16%. Cereals and bakery products up 16%. Fruits and veggies up 10.5%. Non-alcoholic beverages up 13%. Then you look at energy, and natural gas was up 2.5% for the month in September, making for a 33% increase year over year in natural gas. Electricity up 15.5% year over year. Gasoline, gas prices went down still went down in the month of September, but not as much as the month of August because they started to rise toward the end of September. It will be interesting to see where those numbers are once the October numbers come out next month. Here's month over month energy inflation. You can see again why core is useful, because there's just so much fluctuation here due to other variables. But we can expect as the winter approaches that month over month energy prices will go up, which will have an impact on overall CPI. There's gasoline. What will those numbers look like month over month going into future? It's pretty remarkable, by the way. Is anybody paying attention as Joe Biden, Saudi Arabia, and scandal? I mean, it's like quid pro quo, like to the max. He's like, hey, can you give us a little more oil for a month just to get us through the midterms? And if you don't, that's gonna impact our foreign policy against the Saudis. Like, what? That's like so corrupt. And now he's releasing more oil from the Strategic Petroleum Reserve to get the Democrats through the midterms. It really just nothing surprises you anymore. But it's just wow, we have a rotten system in Washington D.C. And then you look at other goods. Apparel was up over 2% for the month of September. Furniture and bedding up 10% year over year. Tools, hardware, outdoor equipment, supplies up 12.5%. New vehicles up over 9%. Look at that. Used cars and trucks went down 4% in the month of September. That's got to have something to do with car loans just being a little trickier to come by now with interest rates going up. You might think that has something to do with it. But shelter, which makes up a third of CPI, 6.6% for the year, up 0.7% for the month of September. So Jerome Powell, next FOMC meeting is November 1st. Right now, the upper limit is at 3.25. We're bare minimum going to see 75 basis point hike, so the upper limit will be 4%. I think they need to do more than that. I'd do 150 basis points. Now that's all problematic, of course, as I outlined in my previous video on the Federal Reserve. The idea that the Fed just sets the correct price, and it's all just founded on bad economic philosophy. And by the way, thank you for the comments. Had some wonderful comments for the last video. People talking about, hey, how do we transition away from the Fed? That again, tricky question, and had some great feedback from people on that question. But we're going to see those rates rise. That's going to have an impact on mortgage rates. Mortgage rates hit 6.29%, the highest in 20 years. This is from last week. I looked at the numbers this morning, and the 30-year fixed rate mortgage is averaging 7.16%. What impact is this going to have on the housing market? It's already new data is coming in showing that home sellers are having a difficult time selling their homes, and they're having to reduce prices. So that's going to have vast ramifications. My wife and I, we've got those golden handcuffs. Have you heard of that? The golden handcuffs. If you locked in a low interest rate, our 30-year rate's at like 2.25 or something ridiculous. Guess what? We're not selling our house. We're locked in there. We're kind of stuck because you sell the house and you buy another. Now you're going to have to take on these higher interest rates. Anyone who bought a home in the last decade is sort of stuck where they are. And unless you want to take on that higher rate, I'm not interested in that. So that's that. Also had another other interesting comments in a video last week. I raised the question, is all this by design? Like, how could you not conclude that this is anything but by design? You look at the Fed's balance sheet, you look at all the QE, the M2, it would appear that either the Federal Reserve is really stupid or they're doing it on purpose. But we know they're not stupid. I mean, these are smart people. Okay, central bankers are smart. Okay, so they must be doing it on purpose. I hesitated a little bit, however, in drawing that conclusion, and some of y'all in the comments pushed back and said, well, of course they're doing it on purpose, Barth. What are you talking about? And I'm, to be to be clear, I'm inclined pretty solidly to agree with you on that point. Let me explain here in a moment. I hesitated because inflation is a global phenomenon. I mean, the Federal Reserve is not the only one that did QE. There's central banks all over the world that did QE and conducted really bad monetary policy. I mean, look at the ECB, for example. Okay, so it would require, for it to be by design, it would require a lot of coordination. It would require central banks acting in concert. The reason why I am open to that hypothesis, and that's what it is simply a hypothesis. The reason I'm open to that, it falls in line with World Economic Forum, with Great Reset, which is a very real agenda item of a particular faction of the global elite. It falls in line with that. And then the other reason why I'm inclined to support that hypothesis is that it would pave the way for the end game, and that's CBDC. Okay? CBDC is the end game here. I think that's pretty clear. Central bank digital currencies. If you haven't watched my video on central bank digital currencies, you're going to want to do that. I'll have a link to it on the end screen. But how do you sell? The big question is, I think it's pretty clear that at least a certain faction of the global financial elite would like to see CBDC adopted. The question is, how do you sell the public on CBDC? To do that, you're going to have a currency crisis. Like if the prevailing currency system is functioning well, you're not going to be able to persuade the public. The public will not get on board. You can have a big propaganda campaign, but it's not quite going to work unless you have a crisis. Unless you have a broken currency system. Okay? You got to break the currency system first before you can put forward the alternative, and then you can sell it. You can say, oh, after the experience of this latest currency crisis, we know now that CBDC would give central banks the proper tools to act in real time and to rapidly conduct monetary policy, or however they would sell it, and you could get it through. And CBDC, I think, is very important for 21st century tyrants because it allows for total authoritarian control. They would love to have CBDC. And by they, I mean, global elites who would like to run things, like the top, most powerful people on the planet. Okay, a certain faction, not all of them, a certain powerful faction would love to have CBDC and would love to control every aspect of your life. How do they get that through? Ooh, wrecking the currency system would be one effective way, wouldn't it? So that's just a hypothesis. I am very open to that hypothesis. However, since I have some difficulty proving, I can't just say outright, I know that's what's going on. I don't, but it sure seems to make a lot of sense. Okay? It seems to make a lot of sense. That it's certainly a possibility, one that we shouldn't discount, one that I'm, again, a hypothesis I'm quite open to and probably most inclined to. What we do know is that we're in for a rough economic ride. 2023 is going to be a tough year, economically speaking, so buckle up and stay tuned because I'm going to continue making these updates. Thanks for watching. See you next time. Bye.